Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500. We've got a lot of things to cover today. There's been so many things happening across the board on different sectors and on different indicators that I want to show you guys. Now, in the last two videos that we posted on the stock market on this channel, we took a relatively bearish stance on the stock market because of what was happening on certain indicators, and we usually try to stay away from having too much of a bearish narrative for very obvious reasons. First of all, stocks tend to go up a lot more than they go down, and the ultimate proof of that is that we're currently at all-time highs. And the other reason for that is because monetary policy has been incredibly easy. Ever since the low in March 2020, we've had incredibly easy conditions, a lot of liquidity, and incredibly bullish price action. In fact, we've been huge advocates for seeing higher highs in the stock market ever since this breakout of this continuation pattern, right? We talked about this. This is a continuation pattern. We broke out because of that vaccine news, and we've been trending up ever since. And this was also a major breakout of a bull market price channel, just so well defined. So these are technically very bullish developments, but that does not mean that we're going to be ignoring some potential warning signals that we're getting on our indicators for potentially a short-term correction. Just because monetary policy is easy doesn't mean you're immune to having a 4 or 5% drawdown to retest this level. So today we're going to discuss that. We're going to take a look at whether anything's changed since the last video. And I also want to take a look at some of the bullish developments that have been happening on the charts lately. Now, if you are new here, make sure to smash that subscribe button because I'll be here helping you navigate through these markets every step of the way. Now, without further ado, let's get right into it. All right, so first things first, has anything changed in the S&P 500 market breadth? And that is the percentage of stocks in the S&P 500 that are trending up, that are trending above their 50-day moving average. Now, in the last video, we talked about this and we said that the market breadth was weak. The stock market is at all-time highs, and yet the market breadth is relatively low. This is still the last reading, but if we take a look at this newer data set, you can see it's staying low. We're not getting a rapid recovery of the market breadth, so that's still a relatively weak technical posture. And it does increase the odds of seeing a correction. That's 100% true, but that does not 100% guarantee that a correction is going to happen. What happens if the market breadth all of a sudden pumps back up to 80% and we have 80% of stocks trading above their 50-day moving average? What does that mean? That would actually trigger a melt up move. Is that possible? Absolutely, right? If you think about how much liquidity is in the system, we've got QE purchases still going on with full force. Just look at this massive rise in the Federal Reserve balance sheet over the past few months. And we still have the federal fund rate at 0. And we know that that is easy monetary policy, and that's bullish for stocks. So what would need to happen for that type of move to occur? Is that possible? If you think about what sectors brought down the market breadth right here, it was mainly industrials, banks, the transportation sector. So we need to be watching what happens with these sectors. And I'm going to show you, for example, the transportation ETF, which we've taken a look at recently. So this is XTN, the S&P transportation ETF that's trending down here, right? And so this is what's creating this divergence in the market breadth because we're seeing these sectors like the transportation ETF begin to trend down. Now you can even see what happened very recently here. We had a breakdown, backtest, rejection. That's a pretty bearish development. If we continue to see lower lows on this sector, I believe it would trigger panic in the stock market for a small 3, 4, 5% correction down to this area of support. And the reason I say that is because the transportation ETF is typically a leading indicator, right? We've discussed this before on this channel. These are examples of areas where the transportation ETF made a lower high, but the S&P 500 made a higher high, and that often precedes corrections. So this is still not a good look right now. Now, could we see this type of move? Absolutely. And if we see this type of move, that would significantly increase the odds of seeing much higher highs on the stock market, because the confidence in market internals would be elevated. But for now, that's not what we're seeing. We have divergence, and this is why we're being cautious of the stock market short term. We're not panicking. We're not guaranteeing that there's going to be a massive crash, but we are being cautious. By the way, if you haven't already, make sure to smash that like button as hard as you can. It helps our channel out massively. If you found this video useful, if you like the research and effort that's been brought to these videos, don't hesitate to let us know. It is really appreciated. Our goal on this channel is not to just be blindly bullish all the time like many channels out there. If you remember, around a month ago, back in May 2021, we posted this video, the stock market is crashing, time to buy the dip. You can go and check it out. This was the moment where everyone was panicking and we were getting into the market, and we still have an ongoing trade setup with our members on the site from this post here, where we called the bottom on this drop at around 4,080 points, and we highlighted 3 main targets here, and we keep on making updates for our members on this trade setup. As the price hit that target 1 here, we talked about booking some profits and staying relatively cautious. If you're interested in following the markets with us every day along with our community, where we talk about opportunities across asset classes, we recently posted our Game of Trades ratings across asset class, where we give you precise convictions, short, intermediate, and longer term on all asset classes. So back to this chart, this is really what we're looking at in terms of the market breadth. In order to regain confidence in stocks, we would want to see a break back above this level, right? That's what we'd want to see, and that would really improve the technical structure on the stock market, and we'd be back to making full-on bullish videos. But right now, we're staying cautious. No reason to take too much risk right now on the S&P 500. There are better opportunities out there. Now, the last thing that I wanted to take a look at is the ARK Innovation ETF right here. This is really an impressive chart that we're seeing right now. Now, I'm going to give you guys some background on what we think is happening with the ARK Innovation ETF. And I'm not sure a lot of you are going to agree. If you don't agree, make sure to leave a comment down below and tell me what you think with constructive criticism. As we were seeing these massive gains on the ARK ETF, it looked a lot like a bubble. You've got unsustainable gains. These are just massive returns. 380% move up on this ETF within less than a year. That is not healthy. That's not normal. You've also got just huge amount of bullish sentiment in this area. Now, a lot less now that we've corrected than right here, but this was just huge optimism with a lot of risk taking on margin and a huge number of new investors, right? Remember what happened right here. Everyone staying at home, everyone on their computer starting to trade. Guess where those new investors went? They went into emerging technology stocks. And that is one of the characteristics of a bubble, seeing a lot of new investors come into that space. Now, it looked like the bubble was popping right here as we had that breakdown below this trendline support here. In fact, we even had sort of a head and shoulder pattern right there. Look at that, with a nice breakdown. But since then, we've had a major rise in these stocks. So that's telling us something, that the bubble might not be over just yet. And if that's the case, if the bubble is still intact, it could continue inflating as it renews its bullish sentiment and gets back to all-time highs and sees parabolic moves again. That's possible. Now, what do we need to focus on right here? What are the important levels? Let's take the fib retracements from that top here all the way down right there. That will give us an important level to look at, which is the 50 retracement level. And you can see that corresponds to a nice resistance zone here, right there. You can see the top of these reactions right there and the 50 retracement level here. Also a few reactions. So we're currently testing that on the ARK ETF. If it manages to clear that level successfully, that really increases the odds of seeing much higher highs on this ETF. But right now I do expect some sort of a reaction off this level. It is a very important level. I would be surprised not to see some type of a reaction, and then we'll see how violent it is to the downside or how shallow it is and how quickly we get back up. This type of move would be extremely bullish for tech and the broader market, right? Seeing these stocks, the ARK Innovation ETF and the FANG stocks lead the markets is actually quite a good thing. And those are bullish developments. But what I want to see before I get too excited is the rest of the market begin to follow, because it's not normal seeing these types of incredible gains just in one sector and seeing the rest sell off. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash that like button. And in the meantime, good luck on your trading and see you next time.